Ryan Mallory here with the stock market update. After 6 straight weeks of nonstop selling on the S&P 500, the NASDAQ 100, and the Russell 2000, we might actually be on the cusp of a stock market rally. This past week, you had the S&P 500 down 2.4%, the NASDAQ 100 down another 2.4%, and the Russell 2000 down 2.5%. But like I said, there's a little bit of a change in the tide here. It's very, very difficult for the S&P 500 or any index for that matter to drop 6 straight weeks. It's done that, but to make it a 7th is really, really unheard of. In fact, just to do it 4 straight weeks, like what we've already seen, that has only happened twice since 2008. We dropped 6 straight weeks in 2008. We dropped 8 straight weeks in 2011. So from a historical standpoint, over the past 2 decades, there's enough reason to believe that to continue to extend the sell-off week by week without any kind of a relief rally is going to be quite difficult. So I do think that there's the potential for a relief rally in the days and weeks ahead. So with the last couple of days of trading giving us some hope for a possible bounce in the markets, we just saw the NASDAQ on Friday rally 3.7%. There's not a lot of major headwinds facing the market in the next couple of weeks. We have the consumer price index behind us. We have the producer price index behind us. We have the FOMC statement from a couple of weeks ago. That's out of the way. So there's not a lot of major headline risk that we know of right now creeping around the corner. In fact, earnings season by and large is over. Yes, there's still a number of companies that still have to report, but your big tech stocks like Facebook and Amazon and Apple and Google and Microsoft and all of your big tech stocks, they've reported. They're done. So we have this quiet period here that's coming up that might give the stock market some opportunity to relieve itself of some of these heavy selling pressures that it's seen over the last 6 weeks. Now look, I'm still a bear on this market. I do not have high hopes for it right now through the end of the year. But in the short term, it doesn't mean that we couldn't see a stock market bounce. And so that's what I'm tilted toward at this moment. I added some QQQ on Friday. I tried to add a little bit of IWM. I got shaken out of the trade maybe a little bit earlier than I should have. But nonetheless, trying to manage the risk, I thought I was making the right decision. And then I saw that sucker rally right after I got out. But I was still able to get back into QQQ today. So sitting good. I'm pretty happy about that. And we'll see what these next couple of weeks have to offer us. Now, let's go ahead and look at the SPY here. What you're going to see here is, yes, the head and shoulders pattern that we've been talking about for months, still there, still confirmed. But for a while there, I was drawing this parallel channel, and I thought that, okay, we were going to bounce off of it a little bit sooner than what we did, but then we broke below it this week, and I'm like, man, maybe this parallel channel is done and over with. I mean, they were perfectly parallel lines. Oftentimes, you'll get some nice bounces off of them, but then when we broke below it, it just maybe throw the whole thing into question. But then I start to realize, and this often happens with technical analysis, is that you have to redraw the line some because with each passing day, you have more information and there's more opportunities to adjust and to better understand what it is that the charts are trying to tell us. And right now, you do have a declining support level in play that it looks like it's trying to bounce off of, as we saw on Thursday and Friday. And so now we have this declining channel. It's not parallel channels, and that's okay too. But it's what we want to watch going forward. Can we bounce off at this level here at 385 like we did on Thursday and start to bounce back towards this 450 to 445 to 450 level before we start to see some selling again? Now, I also want to pull up the monthly chart here because when you have a big, broad market sell-off, it seems like it's never going to bounce, that you're never going to have a rally. But some of the most ferocious and serious rallies happen during bear markets. So this is a monthly chart here. We've sold off so far this year, 4 out of 5 months. May's only halfway done, so we don't know exactly how that one's going to turn out. But if you just go back in time a little bit, let's go back to 2008 first. And on 2008, you'll find there was multiple times where the stock market had some really, really nice rallies. So here's the 2008 sell-off. And I'm just going to put a purple box around the beginning and the end of the Great Recession here. This was your entire Great Recession. This is where we bottomed in March of 2009. Here we have a 5-month sell-off, then we have a 2-month rally. Look at that, 2-month rally during one of the worst financial crises we've ever seen. Then you had a 1-month rally. Then you had another 1-month rally after a 3-month sell-off. So it's not uncommon at all to see these counter rallies in a bear market. In fact, in 2008, there was 4 of them before it ultimately bottomed in March of 2009. Let's go back even further in time to the dot-com bubble. Again, what I'll do here is I'll put a box around the beginning and the end of the dot-com bubble. Essentially, we didn't really start selling off until mid-2000, and we bottomed in late 2002. So this was really one of the longest sell-offs that we have had over the last 22 years. But again, you had a 1 month rally, another massive 1 month rally in April of 2001. Then you had a pretty significant sell-off there, 5 straight months, but then you had a 3 month rally. So these were opportunities to be able to make money to the long side. And what ultimately these sell-offs do is they suck in a lot of people who are having hope that, okay, the bottom's in, I'm going to start loading up. I've been saving all my cash for this moment. And they do that, and then they just get completely train wrecked, because then you have another massive sell-off and then another half year of solid selling thereafter this 3 month rally that we had in 2000. Same thing with 2008. You had a 2 month rally, and then you really had the bottom fall out of the market. So what we could say so far about 2022 is that when you're comparing it to some of the other sells, we've seen some significant selling so far. Not going to discount that at all, especially when you had the NASDAQ down as much as 27%. But you could see with this rally, for it to really become significant, there's a lot more room for it to give up. And so if we get like a 2 or 3 month rally, you could easily see where all of a sudden when that bottom falls out of that next leg lower, it could be much, much worse. So while I'm bearish overall in the market, I do think that there's an opportunity here for us to get one of those relief rallies to not only make money to the downside eventually, but to use this opportunity in the near term to make some money off of the long side. And a couple month rally here would take us into those summer months where you will often see some of the worst sell-offs. Now, let's look at the VIX, because this one continues to amaze me here. How well it is performing from a resistance basis going all the way back to September of 2020. Guys, this resistance refuses to let price sustain any kind of a movement above it. Yes, there's been times one day here and one day there where it'll break above the resistance level, but it can't sustain that move for anything. Look at this in the past week here. On Monday, we broke back above this resistance level. And then the next 4 days, we immediately gave it up. So it's not uncommon for us to actually close above it, but where it becomes a problem for the market is to actually sustain a move above it. Because just like what we've seen so many times, like here and over here in March, and then and again in January, and then you can go back to December of last year, and then you can go back to February of last year, and October of 2020. Every time it gets towards this level, you see some sharp counter rallies in the market. So this further validates what I've been talking to you about here earlier in the video about us setting up for a strong rally here. And let's pull up the Qs, because I haven't gone over those yet. But again, we talked about the channel before. It was looking more like this, a nice parallel channel. But when you really consider the action of this past week and some of the previous price points, it makes more sense for us to be following this declining support level, going back to the January lows and drawing the line from there, and then seeing, okay, can we get a bounce from this 301 all the way up to the 340 to 350 level? It's possible, especially when you've seen as much selling as we have. Would not surprise me for us to see a rally similar to the rally that we saw in March that would take us a much higher than we would expect it to go. And now you got on the weekly chart a lot of hammer candles that are forming. This is more of a doji on the weekly, but nonetheless, it's very similar to a hammer candle. You also on the SPY had the same exact thing. Hammer candle. And then you look at the IWM, another hammer candle off of the 200-week moving average. And then you take the T2108, which I love this indicator, especially when it starts to get into single digits. This indicator here measures the percentages of stocks trading above their 40-day moving average. When you start to get into single digit territory, that's usually a good sign that the market at the very least is trying to put in a short-term bottom because the seller is becoming so exhausted. And this past Thursday, it reached 9%, which hasn't been seen since the lows from March of 2020. So here we go. There's a lot to be optimistic on. But what should we also be very mindful of? The fact that what we think that the market might do might not be what actually materializes. Because we can come up with theories and we can come up with guesses and we can come up with trading opportunities, just like what I've explained to you already here in this video. But oftentimes the market doesn't confirm what we think is going to happen. And so we have to be willing to adjust. We got to be willing to be nimble enough in our trading, especially in this kind of a market, to where we're not sold out in one direction or the other, and instead be very nimble and flexible to be able to adjust to the whims and the craziness that the market has been providing us with all of 2022. Again, I think that there is a good chance that we see a market bounce. However, I don't put it past this market to do something completely out of the blue and to extend this sell-off into a 7th week. And if it does, then I have to go ahead and take my medicine, let my stop loss take me out of the position. But if it does not do that and it actually does work to the upside, then I'm looking at where can I add maybe some more opportunity as the bounce shows itself to be able to be more sustainable. And then where can I start taking my profits along the way and tightening those stop losses. So if you enjoyed this video, make sure you pound the like button and subscribe to this channel. And click the join button down below so you can get my stock market research that I offer you guys each and every single day. And let me know down in the comments below, do you think we're due for a bounce, or do you think this selling is really going to extend into a 7th straight week? I want to hear from you guys. Thank you guys, and God bless.